Martin from Sikich. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what exactly happened during the previous week in the market, and then we make use of a technical analysis to learn something from it and then plan for a better trade for the upcoming weeks. That's what you do every week, and this is for analysis for the week that's starting from tomorrow, Monday, July 3rd, 2023. So if you're not subscribed, please subscribe right away so that you don't miss all the notifications. We do come out at times with other videos other than this weekly analysis. Also check out our playlist, subscribe for sure if you're not done and watching this. Let's dive into the charts first. Here we have the weekly charts in front of you, left side Nifty and right side Banknifty. Look at the candles, man. It's very long time since we have seen such wide range bullish candles. Absolutely brilliant breakout movers happen from the market. And look at the Banknifty, the same. It's a change in variety bounce on the Banknifty for sure, and even the Nifty also was on the supports and it was moving up, pulling back, consolidating, all kinds of things last several weeks, and finally the big breakout from the rounding pattern, the cup and handle patterns, the flag pattern, all of this. No, look at these patterns that you see here. It's a flag. It's a flag portion with the leg of the flag extending downside of the Nifty on the left side, and it's a rounding pattern, and it's a cup and a handle pattern. You can see the dotted line handle. So absolute brilliant breakout of the flag, cup and handle, rounding, whatever I call it. Same with Banknifty. So flag, rounding, second rounding, and breakout, cup and handle also. So brilliant moves. Most what we could watch in a test taken out not only the all-time high, but it made multiple all-time highs, 3 days with gap up, and it even took away the 19,000. Forget about the all-time highs, and then it further went and took 19,100 and went and hit the 19,200 as well. So that is nearly 3%, 2.815, 124 points bullish green candle is what you see on the Nifty. Wide range bullish candle taken out all time highs, and now the all-time high is at 19,200 plus. It's a 14% rally now the previous swing low, and it's all kinds of flag and rounding, cup and handle, and all these patterns on the weekly charts it's seen. And Banknifty is also green, super bullish, 2.61, 1,140 points nearby. Move, wide range bullish candle, right? It's long pullback and consolidation over, and 16% rally from the previous swing highs. The Nifty daily candles, if you see, it's 1% up in both indices, 200 points and 400 points on the Nifty and the Banknifty respectively, and wide range bullish candles on the Friday's candle as well. Right, and that's it. Right, we are absolutely above the 20 exponential moving average for sure. So market is finally broken out ferociously, violently, whatever you call it. It has done a rampage and trapped the bears who thought that the previous week's red is the beginning of a reversal, which never really happened. So it trapped the bears. It took away the major resistance level and that cheered the bulls for further extending to conquer the 19,000 multiple all-time highs and 200 points further from the 19K is what happened last week. So such a bullish week, no words to say that. So now that such big candles are formed, there is some consolidation, some slowdown, some pullbacks, all that can be expected, but eventually, since the breakout has already begun, it has to extend to the height. Consider the height of the pattern. The height of the rounding pattern is what the expected targets on the upside. So that's big. It can go beyond 20,000 for sure, right? But it may be slow and it may take months. You never know, right? And Bollinger Bands are showing that its expansion is happening now on the upside. The bullish bias about 20 exponential daily moving average. And Banknifty also, Bollinger Bands are absolutely expanding on the upside, which indicates that further up moves there. Now this is what the Bollinger Bands are showing. See, it is walking on the bands, right? It is expanded on the upside on the daily charts, expansion on the Bollinger Bands for the Banknifty as well. Look at the levels of the support and the resistance level. So it's all-time high. So we don't know. The sky is limit. It can go up to anywhere from here. But the two ways would be to foresee the resistances at the rounding numbers, and also we can use the Fibonacci extension levels from the previous swing high, and then up to 38, 50, 60. Now it is not gone above the 50. So these all can be the targets on the upside, but the immediate target would be the 9200 that is made. first on the top side, then it can be 19,400, and then use the Fibonacci extension levels and you can calculate like that. But there's a support, gap support is there on the Nifty at 19,189 levels. 19,000 is a rounding number. The big support can be there. 1887, 18,777, 18,740, 18,700 nearby zones, 18,800, 18,600, 18,473, 18,443, 18,300. So all supports downside. 200 DMA is far there near the 18K. It's very far, 1,000 points down. So right, that's the upside levels and downside levels that you can make out from Fibonacci. Fibonacci retracement is what is shown here. We can see that the retracement 23% comes somewhere near this level, where the red line is there below the 18,700 that zones, and similarly 38%, 50%. These are the levels where it can trace downside. Now the targets has to be based on the Fibonacci extension, which is not shown here. So you'll have to draw a Fibonacci extension from here, the last swing to the last swing high, and then trace to the previous swing fall back tracement, right? And then pull back till the pullback last swing low, and then you can get the levels on the upside. Fibonacci extension. That's not shown here. That's a way to find where the markets can go. Projection. Now Banknifty, look at this. It's a cup and handle breakout in daily candles as well. And you can see that the all-time high is where we are. 45,000 rounding number would be the resistance. And before that, you have a resistance of 44,800 zones would have resistance, right? And then downside, it's all supports at 44,750 levels, 44,500 levels, 44,150 levels, 44 nearby zones, 43,600 zones, 43,455 zones, 43,360 zones, 43,000 rounding number zones, and all that. 200 EMA is further down till near to the 42,700 nearby zones, and 20 EMA's support is also seen below the 44,000. Just you have a very good support. So 44,000 holding that is going to be crucial ahead on the Banknifty. Similarly, holding on to the 18,800 would be crucial. Similarly, because that's what the 20 exponential moving average is. So until then, things should be fine. As long as 20 exponential moving average is not reached solidly, bulls have the hope that the rally is going to continue much more. But the bulls, even the bulls might have thought, right? So let's look at the momentum now. You can clearly see that it's all bullish. Momentum on the medium term is what you see on the left, Nifty and the Banknifty on the left, up and down, and right side you have the daily. So all are bullish. And on the weekly charts, on the medium terms, what you see on the left, you have additional thing of range shift in the momentum, which is super bullish. It has taken a shift from the previous the sideways zone, and then bounced into the momentum bullish RSI zones, and then taken a support at the RSI 60 and then bounced up. That's super bullish. That has happened on both indices, Nifty and the Banknifty, both. So absolutely crazy levels. Yeah. So let's move it. Before that, so it's bullish, rising. In the medium term, short term, both. We have additional medium term range shift also there, and that's the same case with Banknifty also. Absolute bullish. ADX, that's a trend indicator that's shown here down. Right. The trend is absolutely bullish. Rising means rising in the strength of the trend. There are two things here. One is the trend line, which is DMI positive and negative. If you're not aware of all this, there will be this in the technical analysis section of the playlist. You check out that. So the Banknifty and Nifty, both medium term and short term, absolutely rising with great strength. Momentum is there, and trend is also there. That's the nutshell. Let's look at the volatility and the opportunity analysis. Now, volatility is at the historic low levels. That's what it is. It's cooled 4% down, and then it's at 10.8. So that's absolutely the low volatility regime, and any sharp reversals from here. Or is less than 11 historically it has given sharp reversals, so hope that does not happen so sharp so that it does not wipe out. So it has got the mean reversing, so we have to be cautious about it. But absolutely historic low levels, spikes is something that we have to be cautious, absolutely. But low volatility, low VIX, India VIX would mean that in the fear and greed is less in the market. That's a summon subset, but that's a word of caution of the main reporting nature of the VIX, since it's at the historic low. That's all. Let's move ahead. So that's about volatility in the market. And volatility, another way of studying that is the Bollinger Bands, which I've already seen. That's expanding and it's on the upside. But it started working on the bands basically. That's So both the bands have shown that, and next would be the open interest data. Let's study that, and before that, now open interest is it's bullish, no doubt about that. The Nifty is long build up that you're seeing on the futures OI, and it's a short covering, which is again, people have gone short now, covering, and can be big spike up, return to the long build up, and it's absolutely bullish on the futures contracts. That's as per the operators of the futures. Now, operators in the next week expire the options on July 6th, 2023, next Thursday. So that's seen in the next chart. But according to that, the put call ratio is 1.64 on the Nifty, and it's absolutely bullish, 1.45 on the Banknifty. So absolutely bullish, nothing else. So look at these levels. The highest put writing is what is dominating, and that shows what's exactly the state of the market. So the highest support is at 19,000, but the maximum number of put writing is in, and absolutely the top side resistance highest would be at 19,500. And the second highest support is in 1900, and after that the second highest resistance upside is 19,200, but that already hit once. So put call ratio, we already seen that it's absolutely bullish, and futures are also absolutely bullish. So Banknifty, look at this level, 44,500 is where the highest put writing, and that's where the support is seen, right? And 45,000 would be a surrounding. The call writers are dominating. The second highest level of put writing is seen at 43,000, and second highest resistance seen at 44,800. Absolutely narrow range, absolutely in par with what the levels in the technical charts is there. So correlate these two things and then come out with a conclusion where we have to enter or exit. Suppose this can be derived from the various techniques of technical analysis from the charts that were early seen based on the Fibonacci retracement levels, based on the previous swing highs, lows, based on pivots, based on moving averages, and all this helps you to. In addition to that, open interest also helps you this way, where the maximum supports can be where the maximum put writing is there and maximum resistance will be at the place. So there's no correlate these two things, right? So that's why we are doing this analysis itself, by the way. Now moving ahead, the industrial sectors, the various sectors that that are sectoral indexes, how did that perform last week? Let's look at. So it's only the IT and the metal which has not done, which is not yet climbed into the absolute bullish zone so far as above 60. But look at this, 3.55 upside on the IT sector. Metal 3% up. Big moves on both the sectors are beaten down, and then but it has to move a little more on the medium term from the side of the bullish to get to catch up with the other sectors. Auto sector 2% of pharma, 4.4% of FMCG, 2.25% of reality is 2.5%. All of them bullish on both the time frames, short term and the medium term, weekly and daily and weekly. It's absolute bullish momentum that you're seeing there, and we have almost all of them having white range bullish can, white range, everything, right? And even the metal and IT also has white range with 3% plus up move, but it is beaten on earlier, so it is still not climbed to the medium term. That will catch up, and absolutely across the sector bullish move is what will happen. Look at this charts. Left side we have IT, which is big white range candle. The momentum is almost getting into the bullish zones. Metal also almost getting the bullish zones. It has hit the resistance and fallen down, completely taken out and reversed now to the bull side. Auto sector has broken out earlier, much ahead. We thought the target is already met when the all-time highs were made. Now it has broken out of that. Also wide range bullish candle. Momentum is absolutely bullish on medium to charts. You can see double tap pattern breakout is what you're seeing on the pharma sector. Momentum is absolutely bullish. Trend is also absolutely bullish. Now our pharma is breaking out as given mega breakouts. FMCG, it has hit the top line of stand, short some resistance there, but again, once again, trying to move. There is a divergence also, which is bullish, positive reverse divergence, which can, it is indicative that it can further move from here. Right? So, absolutely breakout moves across the sectors. What you see now, realty sector, which moved 4% or something, bullish wide range candle. Right? It is broken out of the trend line, broken out of the rounding pattern, now heading to all-time high levels again with absolute bullish momentum and trend. So no doubt on any of those sections across the sector bullish move for sure. Now the industrial heavyweight sectors, where a lot of consolidation was happening since long time. The major contributor is HDFC and HDFC development. Probably from next month on, we don't have this. It will get merged, and that would have its own volatility. I put a tweet on this about that. So absolutely, the HDFC twins have picked up, but it is still not climbed to the bullish zones. It is on the edge of the resistance, but absolute bullish move. right? But HDFC has climbed. HDFC Bank is almost there, just climbed it 60 above. So absolute bullish on both time frames. HDFC Bank. So that's what made the difference. Huge, buying happened on all the industry heavyweights last week. The kind of buying that is happening one day, 10,000 crores plus from FIs. Another day you have 8,000 crores nearby. So that's the kind of buying that has happened last week. Absolute mega FI buying is what happened, and that too all the buyers have been, look at this down here. Reliance also showed green. It fell down after hitting the resistance on the momentum. It has been consolidating, moving up and down, but steady up move from the last several months now from the previous low. And it's on the neckline climbed up. So even the Reliance is probably not climbed to the bullish. Otherwise, when the twins climb, but Reliance is definitely on a green candle at least. No idea also big comeback, but it still has to climb into the medium term momentum, as we have seen earlier. Both the TCs and NFI have shown solid up move, but it is coming to a resistance zone. It is a long way to go to get into the medium term bullishness. Why is the bank? It had big trouble and it has hit the resistance on the price as well as the momentum. It has slipped also, now climbed back, right, with a solid green candle on the ICICI Bank, giving another hit at the all-time high, and see if that breakout happens of the rounding pattern. This is forming a cup and handle actually. We see this retracement that has happened after it has hit the all-time high is the cup and handle, and it could be mega move. Breakout is absolutely sure in case the neckline is breached once again. So it moves from the banking side. Even the Kotak Bank also shows some indecisiveness sideways. So it's Kotak Bank that is in sideways, Reliance in sideways, all others. So if you look at that, IT sector is and NFI also is in sideways, but the bank is ICICI, HDFC Bank. These were the market makers last week. These were the market makers. The banks were the market makers with regard to heavy weights. That's what happens. So other buying happened in the other stocks, which are not in the first critic stocks, but are top contributing stocks. Things are going to change from the next month in the HDFC. More that happens. A lot of volatility can be. We have to be cautious if you're banging on those stocks. Now, look at the participation. This is what 20,360 crores of net buying in the cash market from the Fyers. A small selling, profit booking 50,565 crores is what net to net happened for the DIS and last week. So it was a market that's made by the Fyers. Absolutely no doubt about it. Look at this. Solid buying. 11,300 crores of buying in the Fyers on June 28th. 29th, you have 7,500 another single day cash buying on the FIS. So who made the market? For sure, FIS. That's what we needed. The market to break out and make mega goals. The foreign money has to come in. Okay. Global markets, global commodities, we'll look at that. Gold, then we'll have currencies. Let's have the currencies. Dollar index is flat and NDC 0.06% up. That's 9. On 2.9, it's had an early pullback of 2.75. So it's a cup and handle channel. You can see that. So on the neckline, it's hovering around that consolidating sideways moment is what you see there. So it's holding on cup and handle. If that breakout happens, it can be mega big, but it could fail as well because there is a head and shoulder also, that can pull it down. So if the color could be on the other side, depending on whether how long it consolidates here and whether it breaches with solid red candle or green candle. Now usually INR, the currency pair, you can see that it is in the sideways just like the dollar index, although they are not directly correlated. They're also close flat, 0.08. That's 82. It is still not come down below the 80. So rupee remains weak, although some appreciation might have happened last week. Crude oil is 1.5% of 70.4. So it's a relief as long as it is not spiked above the median of the channel, parallel channel that you're seeing there. It's holding on sideways momentum. Gold is not ready to come down, but it was a red small indice doji of what percent? 0.18%. Very small down move, but it's holding on the top of the channel, cup and handle, and the handle points, and it had attempted multiple times, 3 or 4 times last 1 or 2 years to break out of the all-time high 2024. It failed miserably, but it's not ready to give up. It maintains the sideways momentum and rising. That's what you see in the gold. Right. Let's wrap up now. Global markets, mother market, 3 indices of S&P 500, Dow Jones, and Nasdaq. But left side you have the Dow Jones. You can see that it's bullish green. Overall momentum is still sideways, not yet climbed to the RSI 60 above, but solid wide range bullish candle you can see there. attempted to break out of that descending wedge, and then it is joined by the Nasdaq, which is already broken out of the descending wedge, and then solid green candle there also. So 2% plus up move in the moment. S&P 500 down here, and Nasdaq bottoms are broken out already from the momentum perspective, and the price action point from the descending wedge. Nasdaq is had to climb at the momentum, but seems to be breaking out for sure. And all US markets are green. It's 2% up, 2%, 4% S&P, 2% on the Dow Jones, and Nasdaq also 2%. So it's bullish and attempt to breakouts. That's very positive. Two actionable for the next week. One is Mahindra and Mahindra. The auto sector is doing absolutely great. The volumes are good. Momentum is climbed. It's taken some kind of momentum range shift very close to the support zone of the RSI 60. It has taken a bounce up, which is extremely bullish. And the target can be the height of this consolidation rectangular box. That's very good risk reward. Entry anytime or at a pullback any time can be taken. So it's already bullish, absolute long call on the Mahindra and Mahindra. And the second one is Bharat Heavy Electricals. The cup and handle breakout has happened, and it has a lot of count to go up to 102 for sure. BHEL, it's a momentum range, but the momentum was climbed, taken RSI support, and then bounced up. Absolutely brilliant momentum, brilliant trend also both stocks. Mahindra and Mahindra, Bharat Heavy Electricals too. So another actionable is on the Nifty on the options. This is kind of ratio, double diagonal ratio spread. Not diagonal, it is a ratio spread with completely hedged. It can be called as a Batman strategy also. So basically what we are doing is we are selling at this point stops. That's a range. And we are buying inside hedges within the selling points. These are two buys. But the selling that is done at these 2 points would be double that of the buying. And that will be adjusted fully hedged with a outside hedge that you are buying. So completely hedged just to find. Risk reward may not be that great, but come out at 1 or 2% or something before expired, and reasonable slow that way if you're coming out early before the expiry. And probability of profit is nearly 70%. 70% is okay, not bad. But look at the range that we're getting: 18,750 to 19,350. That's a very good range that you get. Right? And if market does not move, consolidates after this big move, then you get to get nearly 1% of put. But if that spikes up neither side, you benefit. Right? That's weekly options, fully hedged. Completely hedged ratio spread on both sides. Double ratio spread, what I call it. And Batman is another way of going. Double iron fly, that's another name for that. Right? Right, that's the actionable for the next week. Option strategy, weekly option strategy on the Nifty. Right? Completely hedged with a smaller risk reward and good range and probability, decent probability of profit. That's a payoff chart that you've seen there. Now, just to wrap up, having studied all this, now Nifty and Banky for the markets finally broke out for real with a solid green bullish candle is what you can see after several weeks of pullbacks, consolidation. And now it had a week where we had multiple all-time highs, 3 days continuous gap up, and every time the gap up is made, it's an all-time high, all-time high, all-time high. That's what happened last week. Now it not only took away the resistance near that famous resistance zones of the all-time high, not only took that, it took away the near 19K psychological rounding number, and then went for the 200 points above that. Absolutely trapped the bears. Absolutely trapped them, because the previous week's candle was really bearish, really bearish. So that way bears are trapped. The ongoing rally from the previous swing low is 14 to 16% more than that. So absolute further move up could happen from this breakout of the cup and handle pattern, the rounding pattern, cup pattern, flag patterns, all this kind of patterns that we've already seen that. So it's crucial breakout zone. The breakout has happened, and it could further move up. But one thing that you keep in mind that it could pull back a little bit after such big rallies that has happened. So FI has made the market. We've already seen this in buying mode, no volatility, absolutely no wicks, no fear of greed. US markets green, breaking out. OI is absolutely bullish, 1.5 plus on both indices. The bulls are set loose in short, right? The short and the medium term momentum is bullish, mega bullish, trend bullish. Bollinger Band is expanding bullish across the sector, bullish wide range candles, and the momentum bullish also across the sector except 2 metal and IT, just to catch up a little more. Now the indicator rally will continue, but there could be some pullbacks and interim consolidation that could happen, right? But eventually the market is heading up for sure. So the buyers just absolutely bullish, moderate bullish bias. It is not bias, it's actually bullish view, right? Moderate bullish view. It's a market view, right? So that's what it is, and that's it. And that's what my analysis has it for you guys. And yeah, otherwise the global recession, fuels, inflation risk, and war, and all these things are can wipe out all these things in single day, and fixes number all-time historic lows. Cautious about that. Crude oil is okay, and so rupee is negating all the gains that we get from the crude oil low price. So uncertainty is still there. You have to be cautious. And the ranges for the next week is 18,800 and 19,500 on the Nifty, and 43,500 to 45,500 levels on the Bank Index. Now, as long as the 19,000 on Nifty and the 44,000 on the Bank Nifty is held, rally could continue absolutely, slowly, steadily, with pullbacks, interim and all that. But it's on the upside for sure. Now, that's it. So always have risk-defined positions when you're playing with options. Right? Completely hedge, especially if you're heading forward. Overnight. Otherwise, also you have to have stop losses in trading. Right, so protect your capital, have defined risks for you still in the game in case any black swan things like that happen. Absolutely, you'll still be in the game. You will not lose more than what you had defined early, which should be portion size according to what is your risk appetite. Right. So always you can use option strategies like put covered calls and cash secured puts and all that to invest also and get rental incomes. So options can also be used for investing also. Whenever there is pullbacks, you can get rental incomes and play it, right? But yeah, that's it. Save your product, manage your position size, play safe, have tight stop losses, don't try to time the market. When markets will surprise you, never know. So risk management is the only thing in our hands. Rest is all technical analysis, whatever it is. It's all just a way of probability zones where you anticipate bulls and bears how they react. Nothing beyond that. But market can prove you wrong absolutely any time, and that any time, that one day should not be your last day. Should not be the day where it wipes out. So risk management is the only thing in our hands, and play safe. Right? And that's it from my side. So if you're not subscribed and watching this, please subscribe right away and then share it with friends and colleagues. And if you already subscribed, please put in a like if you like it, and comments and feedbacks and all that. We can improve further and add in more contents and all that. And if you want to avail the Telegram services, click on the link that's given in the descriptions. Also, social media, we are acting on all these channels. Subscribe to that and be part of especially the tweets. I put in a lot of trade analysis and stock analysis and all that, throughout the week. And this lengthy video comes in only in the week, but throughout the week I'm acting on the social media. So you can subscribe to any of those. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.